2017. Earlier in the day, we spoke to Vallabh Bhanshali, chairman of Enam, and we asked him about the outlook for 2017.
I think the first half or most of it should remain bottoms-up market. But I think with a lot more confidence, because I think the year of break was 2016. We broke from a lot of traditions. And that creates more clarity. We have a new president in the U.S. by 20th January. We have the budget here by 1st February. And demonetization behind us. So I think we have a lot of policy clarity that will emerge very soon in the next 6 to 8 weeks. And that will make the bottom pickers or the bottom-up people more comfortable with greater policy clarity. So I see better days ahead.
Mr. Bhanshali, good morning and a very happy 2017 to you.
Same to you, Lata. Same to you.
So, you know, the New Year announcements from the Prime Minister as well as a giant rate cut from State Bank. Do you think this is a fairly potent combination? Do you see a recovery picking up?
I definitely think I haven't for a long time seen a sharp cut like this, and I think more banks will follow. But I must also say that this in itself may not be enough, and we need to see greater expenditure by the government. But in itself, something we have been clamoring for, a big rate cut, irrespective of what RBI does, has happened. And I can't welcome it enough.
Mr. Bhanshali, good morning. So you spoke about the possibility or the hope of greater expenditure. What more do you think the government could announce in this budget, and what are your own expectations?
I think the government has been, pushing expenditure on the infrastructure side. And I think more could happen where, rubber hits the road. And I think given the fact that we have had demand destruction, people will look for even more tangible support. And I think one thing that I liked about the recent announcements, and I hope that that gets built on, was very measured approaches. It was not a populist kind of thing. And they were in different areas. Nothing was out of hand. The growth in numbers, whether there will be 33% more homes or doubling of loans to farmers and so on, everything is very measured. I think this measured, calibrated approach in the directed, well-selected areas, that if it continues into, say, expenditure on certain roads, certain railway projects, whether it is rebuilding stations, we had those announcements in the recent visit from the Prime Minister where he announced several projects on the railways here. So if we see more money come out and advances go out to contractors, I think the rate cut plus some of those measures will really boost the sentiment.
Mr. Bhanshali, that point is taken that for now it's measured and calibrated, but the risk is that as we head into an important election year as well, we have UP elections around the corner, could we get some bit of populism as well? And that's something that the capital markets don't like. Your thoughts on that?
I think the moment for the populist was the 31st December. And if on that day he chose not to be populist and be very measured, I think the risk is over. So I would not expect any more populist measures as such. If we haven't heard the final numbers on demonetization, the government has made its intention clear by passing an ordinance to deal with the shortfall, if any, which I don't expect to be a large number. So that might be a different story, but I think it's been extremely measured, and I personally don't think any more populism.
Okay, so you use the word demand destruction, and even now as we speak, there are daily reports of the tax authorities doing their analytics on the way in which deposits have come back into the system. Now that needs to be done, of course, but what does that do to demand, especially consumer discretionary demand?
Lata, as a long-term investor, I look for, what is being done for the long term. For, almost decades and centuries, we have got used to a way of life where gaming the system is okay, it's even smart. I think that has to change. And I think here we have a leader who has taken huge political risk and continues to take that political risk to correct the system. I think I feel a lot more secure from a future generation's point of view that we are moving in that direction. So I wouldn't worry about it. That demand destruction happens for some people. We are missing out at how much the organized sector is liking it.
So,
There are a number of investors who are just looking forward to investing in companies that will benefit from a more organized economy.
so what do you see as the trend from FIIs over the next 3 to 6 months, Mr. Bhansali? Because in the last 3 months, FIIs have pulled out at least 40,000 crores from our markets. And there's been a big degree of underperformance of the Indian markets versus other markets, including other emerging markets. What do you see as the trend here on?
I think this was a massive correction following Donald Trump victory. And I think also picking up gains that they had accumulated in emerging markets. As you rightly said, it is across the board. It is not really related to demonetization or demand destruction here. So I think this is self-reversing. Markets, when the prices are low, send their own trigger for investors to come back. So I am not worried about that at all. They are always opportunistic, and they will come back.
2017 is a better year, sir?
Definitely, no doubt about it.